What if I told you that a tiny copper coin, something most people wouldn't even bother to pick up off the sidewalk, could actually predict the collapse of an entire empire? Sounds dramatic, right? But here's the thing. After 232 years of continuous production, the United States just printed its very last penny. And when I saw that final coin rolling off the assembly line at the US Mint, I didn't see a worthless piece of metal. I saw a warning, a symbol, a metaphor for something much bigger and far more terrifying that's heading straight for all of us. If you're concerned about your financial future, if you want to understand what's really happening behind the curtain of our economy, then you're in the right place. This is Monetary Archaeologist, and I dig deep into the financial stories that others are afraid to tell. Hit that subscribe button right now and turn on notifications, because what I'm about to share with you today could change how you think about money forever. I remember exactly where I was when I first heard the news about the penny. I was sitting in my home office scrolling through financial reports like I do every morning, a cup of coffee getting cold beside me. The headline hit me like a punch to the gut. The last penny had been minted. 232 years of American history gone, just like that. Now, most people probably shrugged at this news. They probably thought to themselves, who cares about pennies anyway? Kids don't even pick them up off the ground anymore. But I knew immediately that this was about something much bigger than a small copper coin. This was the United States government essentially admitting that our currency has become so devalued, so inflated, that even our smallest denomination isn't worth the metal it's printed on. I sat back in my chair and let that sink in for a moment. The US dollar is declining faster than the Titanic, I thought to myself. Central banks around the world are hoarding gold and silver like they know something we don't. We're sitting on $38 trillion in debt with no end in sight. And here we are celebrating the death of the penny like it's some kind of progress. Think about it this way. Pennies are just worthless now, so we might as well move to the nickel. In fact, a nickel is now basically what a penny used to be. I guess we'll have to start saying a nickel for your thoughts instead of a penny for your thoughts. It sounds like a joke, but it's not funny at all. Inflation has taken hold of our economy in ways that most people don't fully understand yet. I found myself thinking about my own family. Something happened recently with our daughter that really drove this home for me. She lost a tooth, and we had to call in the tooth fairy. But here's the thing. When I was a kid, you might slip a quarter under the pillow, maybe 50 cents if you were feeling generous. But now, we had to slide a whole dollar under there, and even that felt kinda cheap. Inflation is hitting everything. Even the tooth fairy isn't safe anymore. Kids today don't even bother picking up quarters off the ground. Think about what that means. Think about how much value our currency has lost when children consider 25 cents not worth the effort of bending down. Let's talk about the real elephant in the room, the national debt. This is where things get truly frightening, and I could feel my stomach tightening as I laid out the numbers for myself. The US national debt has climbed to $38 trillion. To put that in perspective, it was only about $10 trillion back in 2008. We've nearly quadrupled our debt in less than 20 years. And here's the part that really keeps me up at night. We're now paying over $1 trillion every single year just in interest payments. Not paying down the debt, not investing in infrastructure or education or anything that might help ordinary Americans. Just interest. What does this level of debt mean for regular people? People who are already struggling to pay their rent. People who are watching their grocery bills climb higher every month. People who are wondering if they'll ever be able to retire. The answer is blunt and sobering. If you believe the dollar is going to stabilize or become more valuable over the next 10 years, you're absolutely kidding yourself. That's why central banks around the world are hoarding gold and silver right now. If they could hoard other assets like real estate, they probably would. But gold is the asset they can accumulate. That's why we keep seeing record highs. Let me walk you through the math, and it's devastating. When you go from 10 trillion to almost 40 trillion in debt over basically 20 years, nobody wants to hold dollars anymore. And here's the trap we're in now. We will always have at least $1 trillion deficit going forward because we have to borrow $1 trillion every year just to make our interest payments. We're borrowing money to pay the interest on money we already borrowed. It's a death spiral. I felt a chill run down my spine as I thought about this more deeply. If you believe inflation is going to stop or slow down significantly, you're also kidding yourself. You don't understand how inflation actually works. Inflation is too much money chasing too few goods. The government has pumped all this money into the economy. At the same time, central banks around the world are selling dollars to buy precious metals. And where do those dollars go when they're sold? They come right back to the United States, adding to our money supply, making inflation even stickier. It was like puzzle pieces clicking into place in my mind. People keep wondering why inflation won't go away, why prices keep climbing even when the government says everything is under control. This is why. The dollars that other countries don't want anymore are flooding back into our economy. And on top of that, our government can't control its spending. They cancel pennies while simultaneously running deficits of over $2 trillion. Nobody should be surprised that gold is hitting record highs. Bank of America, Goldman Sachs, JP Morgan, these massive institutions are predicting gold could hit $5,000 an ounce by 2026. Just a few months ago, when I was talking about silver hitting $50 an ounce, people called me crazy. I literally received messages from viewers telling me I was nuts, that silver would never go back to 50. And here we are. Silver is at $50 an ounce again. I thought about my own journey with precious metals. For years, my wife and I have been buying gold. We started when it was around $1,700, $1,800 an ounce. Now it's well over $4,000. We didn't do it to get rich. We did it for wealth preservation. I think of gold as a vault for my family's future. For 5,000 years, gold and silver have maintained their value, while government currencies have risen and collapsed, over and over again. Something happened just recently that caught my attention. President Trump hosted a dinner at the White House with all these major bankers. JP Morgan Chase was there, Goldman Sachs was there, Blackstone, the massive real estate buyer, was there. On the surface, it looked like just a friendly dinner. But I knew better. Something was going on. Something was being discussed behind closed doors. The federal deficit is projected to hit $2.2 trillion in 2026, according to the Office of Management and Budget. The Congressional Budget Office expects deficits to stay above 6% of GDP for years to come. What do those numbers tell us? And what do you think Trump and those bankers were really talking about? Here's my analysis, and it's sharp and unsettling. We're definitely heading for a recession. We're in some sort of bubble right now. The stock market is at record levels, at ratios we haven't seen since 1929, 2008, or the dot-com bubble in 2000. The question everyone should be asking is, what options does the government have when this recession hits? Let me walk you through the limited playbook available to policymakers. The Federal Reserve could lower interest rates, but rates are already fairly low, and inflation is too high to lower them much more without causing other problems. The real interest rate, meaning what you earn from a bond minus inflation, is basically break-even right now. If you're making 4% and you pay taxes on it, you're probably losing money slowly. You're just going broke slowly. The other option is to print money. But what happens if we print our way to 80 trillion in debt? The dollar would be worth nothing. We wouldn't just be getting rid of pennies, we'd be getting rid of quarters, dimes, nickels, everything. A dollar would be worth what a penny used to be. Central banks would dump dollars even faster. Inflation would spiral out of control. I believe that's exactly why Trump had those smart minds in the room. They're trying to figure out what to do when this economy starts pulling back, and it's already happening. Look at the real estate market showing signs of weakness. Look at Chipotle, one of the most successful fast casual restaurant chains, struggling to keep sales growing because people aren't coming in and spending like they used to. When quick-serve restaurants start having trouble, that's usually a warning sign. You know who the real smart guy in the room probably is? Elon Musk. He got in there wanting to lower all of the spending that the government was doing. That's the smartest idea, but nobody really wants to do it. You had Congressman Thomas Massie. You had Senator Rand Paul. Very few people on the Republican side were saying, we've got to cut spending, keep the government shut down if we have to, pull back on all of this runaway spending. And then we hear about tariff money coming in. Now there's talk of cutting $2,000 stimulus checks for people using this tariff dividend. Why not pay down the deficit instead? Why not shrink the size of government? That's what people voted for overwhelmingly. Shrink the size of government. Create a DOGE department. Cut billions and billions of dollars in waste, fraud, and abuse. But it doesn't look like that's really happening at all. The money machine just keeps printing. The can has been kicked so far down the road that we're at the end of the road now, and it's a one-way street, a dead end. If they can't get this spending under control and we get through a recession, think to yourself, what are the options for the government to get the economy back on track? It's only printing more money. Just this morning, I saw another troubling headline. Verizon announced they were laying off 15,000 employees. 15,000! This is a company that provides cell phone service, something people treat like a necessity, almost like a third limb. If Verizon is cutting back that dramatically, it tells you consumer spending is declining. But there's another factor at play here too: artificial intelligence. Many of those 15,000 jobs are probably being replaced by AI systems. We're witnessing a massive shift in the economy, and it's happening faster than most people realize. Company after company is announcing layoffs, and AI is consistently cited as a reason. Amazon just laid off 15,000 people and explicitly cited AI as the reason. Then there was the news about the October jobs numbers. The Trump administration suggested they might never be able to release that data from October, blaming it on the government shutdown. We might never know how the economy was really performing during that critical month. It sounds convenient, but it also might be true. The shutdown created chaos in data collection. Here's why this matters so much. The Federal Reserve needs reliable data about unemployment and payrolls to make decisions about interest rates. Without accurate information, how can they make good decisions? There's the Household Survey and the Establishment Survey, the two main tools used to measure employment. The Household Survey is really for unemployment. The Establishment Survey is really for payrolls. Parts of these surveys require physical visits to households and businesses. If that work didn't get done during the shutdown, the data is compromised. The risks are enormous. Without good data on inflation and labor markets, neither the Federal Reserve nor the stock market can properly assess risk. Prices get set incorrectly. Interest rates might be adjusted based on faulty assumptions. The whole system becomes more fragile. But here's something even more concerning. If we go into a recession, how do we get people back to work when AI keeps taking over more and more jobs? What happens when unemployment rises but there aren't jobs for people to return to? I could see where this was heading, and it wasn't good. Universal basic income. The government writing checks to people because there simply aren't enough jobs anymore. The deficit climbing higher and higher. More dependency, more control. If we go into a recession and the Fed concentrates on inflation and unemployment like they always do, but unemployment can't get back on track because of AI, then what do? Universal income, and the deficit goes higher and higher and higher. How do you get those people back to work? They're not going to go back to work. I thought about the millions of Americans already on SNAP benefits. During recent times, that number swelled to over 40 million people relying on the government for food assistance. And there are powerful forces that want to push us further in that direction. They want universal basic income. They want digital IDs that track everything. They want to move us slowly into what Catherine Austin Fitts calls the corral, a system where they can control everything about our financial lives. Digital ID control. Make sure they're tracking all of your spending. And by the way, they'll provide you with some sort of universal basic income, so you get a few $1,000s a month from that. On top of that, you get free food and SNAP benefits. This is where it's headed. They want people totally reliant on the government. And then, by the way, they'll vote Democrat because of it. A digital currency would be particularly scary. With a central bank digital currency, the government could immediately raise taxes whenever they wanted, on a local basis, on a federal basis. They could monitor every purchase you make. If you're not spending enough, they could implement negative interest rates, literally taking money out of your account. This has already happened in parts of Europe. Save too much money? The government penalizes you for it. Hey, if you're not spending it, if you're saving too much, then we're going to reduce the savings rate to a negative rate. There's a bunch of things they can do with digital currency that a lot of people need to be aware of. This is why physical precious metals matter so much. They exist outside the digital system. They can't be tracked the same way. They can't be confiscated with the click of a button. They've been a store of value for 5,000 years, surviving every empire, every currency collapse, every financial crisis. Let me make an important point about listening to the right voices. When JP Morgan talks about precious metals, sure, they have an agenda. They own one of the biggest hoards of silver of any investment bank. So if they're talking about precious metals, they have a reason to talk about it. But when Goldman Sachs starts predicting $5,000 gold, that's a completely different story. Goldman doesn't really deal in precious metals. They don't have a stake in talking up the market. They could care less about the precious metals market. But their analysts have access to enormous amounts of information, and they're telling their wealthy clients to pay attention. With central bank buying, with all of the things we have going on in the economy, some institutions and some very wealthy people and smart investors are coming into the market because they know the dollar can't go anywhere but down. Interest rates will probably hover below the rate of inflation. It's just horrible for savers and horrible for investors when we finally get this next recession. Everybody needs to get prepared for it. That's why President Trump had the bankers and the smart guys in there trying to figure out what to do if this economy starts pulling back. I've been following what states are doing with gold and silver. A number of states are now saying you can transact in gold, not just US dollars. There are up to 6 states now. Florida was just added to that list. Texas also added to that list. You can actually use gold and silver to transact. Everything in that direction is going the right way. If central banks are hoarding gold, and gold's been around as a currency for 5,000 years, it's done a heck of a lot better than the paper dollar has. Why not use it as a currency? People are using Bitcoin, and it has nothing backing it, so why not gold? People should understand that at this particular point, we are at the end of a cycle as the US dollar as the world's reserve currency. There have been 6 other world reserve currencies throughout history. They all lasted approximately 110 years, and we're kind of at the end of that. And they all failed for the exact same reason: debt. Every single one of them failed for the exact same reason. The government piled on debt in the end. Nobody appreciated or trusted in the currency, and they all failed. That's literally where the United States seems to be headed unless somebody gets in there and stops all this money printing. And if they don't, then don't be surprised if gold ends up being $7,000 or $8,000 an ounce. It may sound nutty, but a lot of people thought it was nutty when gold was $255 an ounce in 2000. I said the price of gold should be a couple $1,000s an ounce based on the debt in the United States government and where it's headed. And here we are at $4,000 an ounce. There is a long way to go for precious metals when you think about how small the precious metals market is compared to how big the currency market is. Just a small portion, 2 or 3% of the currency, making a shift into the precious metals market, and you're at $6,000 or $7,000 an ounce. Goldman Sachs coming out and saying $5,000 an ounce, it's a drop in the bucket. It might be $5,500 next year. I want to be clear about something. I'm not saying everyone should run out and put everything they have into precious metals. That's not smart investing. It's about diversification. I recommend having 5 to 15%, maybe as high as 20%, depending on your situation, in precious metals. You should also have real estate. You should have stocks. A balanced portfolio that can weather different types of storms. Let me share a powerful example from 2008 that illustrates this perfectly. During the financial crisis, there were real estate investors who owned buildings where tenants had moved out. But they could afford to keep making mortgage payments because they had diversified. They had precious metals that had gone up in value while real estate crashed. They used that liquidity to buy distressed properties at rock-bottom prices. Today, those properties are worth far more than they paid. Other investors weren't so fortunate. They had all their wealth tied up in real estate. When tenants left and they couldn't make mortgage payments, they had to scramble. Some of them sold their gold just to avoid foreclosure. But at least they had that option. The gold gave them liquidity when nothing else would. You couldn't sell real estate quickly in 2008. Nobody was buying. But you could always sell gold. That's the key insight. Gold provides liquidity and acts as a hedge against other assets declining. When the stock market fell during the crisis, precious metals skyrocketed. A 20% allocation to precious metals might have become 40% of your portfolio as stocks dropped and gold climbed. Smart investors at that point sold some of their precious metals and bought stocks at record low levels. That's how you build wealth through cycles. It's not owning all precious metals. It's diversifying and having something that gives you liquidity and an offset of what these other assets could potentially do coming up.
Here's something that stuck with me. If you're holding dollars, you're just going broke slowly. Put it in a savings account or a CD, and you're still just going broke slowly. You might feel better because you can look at the balance, but you're losing purchasing power every single day. Your interest rate is lower than the real rate of inflation. And at the end of the year, you pay taxes on the interest you earned. It's a losing game. I wouldn't want my family's future in US dollars, I can tell you that. As I thought about all of this, I found myself thinking about the younger generation, about my son. These young people will be entering the workforce in the next few years, and the world they're walking into is radically different from anything we've seen before. My advice to them is to consider the trades. Become an electrician, become a plumber, learn to frame a house. These are hard skills that AI cannot replace. A robot isn't going to come fix your leaky pipe or rewire your circuit breaker panel anytime soon. There will always be demand for people who can do physical work with their hands. I know a guy who owns 9 businesses. He just sold one of them for $90 million. None of them are glamorous tech startups. They're all trades. Practical businesses that provide services people actually need. He told me that's the future of America. If you can build a business in the trades, whether it's gutter cleaning or carpet cleaning or plumbing or electrical work, you're setting yourself up for success in a world being transformed by AI. The trades might not sound glamorous, but you can make them glamorous. Own the whole plumbing company, scale it nationally, create a brand. The work is essential, and it's not going away. The trades are going to start coming back with this AI. It's absolutely incredible what AI can do, but it's also very scary what it can do. As I reflect on everything I've researched and discovered, I keep coming back to that image of the last penny rolling off the assembly line. It seems like such a small thing, just a worthless copper coin that nobody wanted anyway. But it represents something profound about where we are as a nation. We're $38 trillion in debt. We're paying $1 trillion a year just in interest. Central banks around the world are dumping dollars and hoarding gold. Inflation is eating away at our purchasing power. AI is transforming the job market in ways we're only beginning to understand. And our government solution is to keep printing money, keep running deficits, and hope somehow everything works out. I don't know exactly when the next recession will hit. I don't know exactly how bad it will be. But I know it's coming. The smart money knows it's coming. That's why gold is at record highs. That's why major banks are predicting it will go even higher. That's why central banks are accumulating precious metals at an unprecedented pace. The question is, what are you going to do about it? Are you going to keep your wealth in dollars that are declining faster than the Titanic? Are you going to trust that the government will figure it out? Or are you going to take steps to protect yourself and your family? For me, the answer is clear. I've been buying gold and silver for years now, not to get rich, but to preserve what I've worked so hard to build. It's my vault, my insurance policy against the chaos that may be coming. And every day that passes, I'm more convinced it was the right decision. The penny is gone. 232 years of American history ended with that last coin. But maybe, just maybe, it's also a wake-up call. A reminder that nothing lasts forever. Not empires, not currencies, not the comfortable assumptions we make about the future. The choice is yours. Will you pay attention to the warning signs? Or will you be caught off guard when the bill finally comes due? Thank you for joining me on this journey into the economic forces shaping our world. I'm monetary archaeologist, and I'll keep digging for the truth. Make sure you're subscribed and have notifications turned on because there's so much more to uncover. Until next time, protect your wealth, question everything, and stay vigilant.